Hello, welcome to my channel. I'm Stella. I specialize in accounting, tax, and investments. Today's topic is 1099 forms. With the tax return deadline fast approaching, you might be overwhelmed with those tax forms. Well, don't worry, I'm here to help. So today we are going to decode each one of them. Let's get started. So let's start with the basics. What exactly is a 1099 form? A 1099 is an IRS form that reports non-employment income, meaning money you earned that didn't come from a regular W-2 job. Think of it this way. If you made money outside of a traditional employer relationship, whether from freelance work, dividends, interest, or even crypto, someone probably sent you a 1099. The IRS uses this form to make sure you report all your income, even the money that doesn't show up in your paycheck. Next, I'll go over common types of 1099 forms. There are several types of 1099 forms, and each one reports a different type of income. Let's break down the most common ones. First, 1099 NEC, non-employee compensation. If you're a freelancer, contractor, or gig worker, this is your form. You get this if a company paid you $600 or more. Yes, this goes on your tax return even if you didn't get it taxed upfront. Next, 1099 MISC, miscellaneous income. This was used to report rent, royalties, price winnings, legal services, etc. Now, this is not as common as it used to be. A lot of non-employee income moved to 1099 NEC. Third, 1099 INT, interest income. This form reports interest from a bank or brokerage account. Even if it's $10 of interest, it's still reportable. Fourth, 1099 DIV, dividend income. 1099 DIV reports dividends and capital gains distributions from stocks or mutual funds. I will break it down later. Great if you're investing. Not so great if you forgot to plan for taxes on those payouts. You may check out my video about dividend income and tax strategies. Next, 1099B, broker transactions. 1099B form is for capital gains or losses when you sell stocks, ETFs, crypto, etc. Make sure to match this with your cost basis to figure out your tax liability. Next, 1099K form. Third-party payments. This one is newer and trickier. It reports income from payment platforms like PayPal, Venmo, Stripe, etc. Starting in recent years, even smaller thresholds like over $600 could trigger a 1099K, even for things like splitting rent. So be careful. Next, 1099 ARC form, retirement distributions. If you took money out of a 401k, IRA, or pension, this is a form that tells the IRS. Why did you receive a 1099? So you might be thinking, why did I even get a 1099? Well, you got a 1099 because someone paid you money and they're telling the IRS about it. And now you have to report it on your tax return. Even if you didn't receive a 1099 for a certain income stream, you are still legally required to report it. The form is just a reporting mechanism, not a permission slip to skip taxes. Okay, let's talk about tax impact. Unlike a W-2 jobs, 1099 income has no taxes withheld. So you're responsible for paying your own federal, state, and even self-employment taxes. You may need to file Schedule C and pay self-employment tax, Social Security, plus Medicare. You may also need to make quarterly estimate payments and track business expenses to reduce your taxable income. Also, you should keep records for audit protection. Pro tip: if you're earning significant 1099 income, consider working with a tax professional or using good accounting software. We'll discuss what to do if you didn't receive a 1099. If you think you should have gotten a 1099 but didn't, check your records. Maybe the company has the wrong address or email. You can still report income manually. The IRS expects you to do that anyway. And yes, the IRS can still match unreported income to you based on other records. When you file your taxes, you use the following forms. Schedule C for self-employed, freelance income, for 1099 NEC, MISC. Schedule B for interest and dividends, for 1099 INT, DIV. Schedule D plus Form 8949 for capital gains, for 1099B. Form 8889 for retirement distributions, for 1099R. If you are using tax software like a TurboTax, H&R Block, or a CPA, they'll walk you through these steps. But it's good to know what's happening behind the scenes. Alright, let's dig deeper into two forms that are especially important for investors: the 1099 DIV and the 1099B. These often go hand in hand and are frequently included in your year-end brokerage tax packet. Whether you are investing in stocks, ETFs, mutual funds, or REITs. Let's decode the 1099 DIV, dividend and distribution income. The 1099 DIV reports dividends and distributions you received from your investments during the tax year. But not all dividends are taxed the same. Let's break down the key boxes. Box 1A, total ordinary dividends. This is the total amount of dividends you received from your stocks or funds. Includes both qualified and non-qualified dividends. All of this must be reported on your Schedule B. Box 1B, qualified dividends. A subset of 1A, these are dividends that meet IRS requirements for favorable tax treatment. Taxed at the long-term capital gains rates, 0%, 15%, or 20%. Instead of your ordinary income rate. To qualify, you must have held the stock for a specific holding period, typically 60 plus days around the ex-dividend date. Box 2A, total capital gain distributions. These are capital gains passed through from mutual funds or ETFs, not gains from selling your own investments. They are reported on Schedule D, even though you didn't personally sell anything. Box 3, non-dividend distributions. This is often a return of capital, ROC, not taxable when received, but it reduces your cost basis in the investment. So it can create a future capital gain when you sell. Box 5, Section 199A dividends, REITs, MLPs. Certain REIT or MLP dividends may be eligible for a 20% QBI deduction. So make sure your tax software or CPA accounts for this. It can lower your tax bill. Investor tip: always cross-reference your 1099 DIV with your portfolio activity. Even if you reinvest the dividends, they are still taxable in the year you received them. Next, I'll explain 1099B in details. Proceeds from broker and barter transactions. 1099B reports proceeds from selling your investments, such as stocks, ETFs, options, crypto in some cases, and more. Every time you sell a security, your brokerage is required to report date acquired and sold, cost basis, that is what you paid, sales proceeds, that is what you sold it for, capital gain or loss, whether it was short-term or long-term. What are differences between short-term and long-term capital gains? Short-term gains are assets held less than a year. They are taxed at your ordinary income rate. Long-term gains, that are assets held more than a year. They get preferential rates, which is 0%, 15%, or 20%. Then, what are covered and non-covered securities? Your brokerage reports cost basis of covered security to the IRS, usually security purchased after 2011. For non-covered securities, you're responsible for tracking cost basis. The IRS doesn't get that info. What are wash sale rules? If you sell a security at a loss and buy a substantially identical one within 30 days, your loss is disallowed temporarily. The brokerage should flex this on the 1099B, but you still need to understand how it impacts your adjusted basis and future gains and losses. Form 8949 and Schedule D are for 1099B. You use Form 8949 to detail each sale. Then summarize on Schedule D. Tax software often pulls this in automatically, but if you are a DIY investor, double-check every line, especially if you transfer the assets between brokerages. Investor tip: if you use tax loss harvesting, make sure your 1099B reflects any adjusted basis change, and be aware of how it affects your long-term investing strategies. You may check out my video about tax loss harvesting. How to stay organized. To avoid a tax time headache, keep a folder for all your 1099 forms. Track income and expenses throughout the year. Set calendar reminders for quarterly tax payments. Consider a separate business bank account if you're a freelancer. So there you have it. 1099 forms don't have to be scary. Yes, they come with some extra responsibilities, but if you stay organized and understand what each one means, you'll stay ahead of tax season stress. If this video helped you, make sure to like, subscribe, and drop a comment below with any questions. I'm always here to help you make sense of money. Thank you for watching. See you next time.